Hi guys, I'm Pavelko from FxPro. Today we are going to talk about the latest news and discuss exactly how to trade during periods of extreme market volatility. Should you even do this? What is it anyway? What kind of news causes such extreme volatility? In general, we'll discuss everything related to trading on the news. So let's take a moment to understand how this process actually works in practice. Looking at it now, it becomes immediately clear that trading on the news is a potentially very serious and significant financial risk. And we understand that the news we've been seeing over the past few years is of a very significant nature. It's basically chaos. Why is that? This is because, by and large, experienced professional traders usually don't trade at the exact moment such news is released. You know that there are a lot of large institutional trading companies that operate using automated trading bots. Those that use algorithmic trading actually turn off their trading robots entirely during these major news events. Furthermore, almost all prop firms that give you money to manage will strictly prohibit trading during these volatile news periods. Why is that? Because these are completely unpredictable events, so professionals understand that during news releases, the market dynamics are so chaotic that the market, that's right, simply becomes completely unpredictable. Trying to make money on this is just madness. That is why right now we will examine and understand how to position ourselves during such periods. What exactly happens during the release of such news? First of all, market liquidity starts to partially decrease and thin out. Because, let me repeat, a lot of people simply don't trade at these times. Here, let's not confuse news of a situational nature. For example, non-farm payrolls, which comes out every Friday of the month, and for instance, certain major global news stories like the escalation of war in the Middle East as a primary example. In other words, these are news events with varying lengths of impact. So if we're talking about a series of events, for example, economic ones, like an increase in oil prices that leads to a rise in interest rates because inflation has gone up, these are entire economic processes. Based on these processes, of course, entire hedge funds trade. Their strategies are built precisely on this, exactly on this. But right now, we're talking about news that flows into the market, causing the market to move for a certain number of minutes or hours. And during this time, there's not much to be earned, which is why liquidity drops. That's exactly why such large movements begin, because the market is quite thin. Spread widening is one of the most dangerous things for a trader because it's the broker who widens the spreads to protect themselves, and sometimes the widening can reach very significant levels. Really. For example, where the normal spread on the forex market is 2 to 3 points, during such news events it can reach 50 or even 100 points. I've seen such cases myself in real time. So, trying to make money on such spread widening is basically madness in itself. Furthermore, when news is released, prices change very aggressively. And these jumps are so aggressive that if you suddenly decide to enter right at that moment, during the period when such news is published, your trades will naturally be opened with gaps. As a rule, unscrupulous brokers open these gaps to the client's disadvantage, so there's a whole set of undesirable situations. That's exactly why, in these volatile situations, your established trading system may either cease to function as intended or start working incorrectly. In other words, it simply won't deliver the consistent performance and reliable results you're used to seeing during normal market times. Consequently, the most significant error you could make during such a period is to try to profit from these unpredictable, news-driven market movements. Frankly, typically only an inexperienced beginner would come up with such a risky idea because a seasoned trader would never choose to do that. Why? Because the biggest mistake you can make, let me continue this thought, is the following. Number one, entering the market right before the news. For example, let's imagine that at 15:30 European time, on the first Friday of every month, the non-farm payrolls are published, and you start entering the market 3 minutes before the release. That is absolutely foolish, really. An action you can take because, first of all, you don't know what the actual figure will be. That's one. Most importantly, how the market will react to it. That's two. No one knows what will happen with prices in terms of gaps or widening spreads either. So essentially, you're diving, yes, into a pool full of sharks, and you're basically hoping that they won't hear or see you, which is just utter nonsense. Then trying to act during this kind of movement, there's often total chaos, especially during, well, non-farm payrolls. And by the way, a long time ago, about 20 years back, I even wrote an article on how to make money on non-farm payrolls. Back in those days, I was just starting out in trading. Now, I would never ever write such an article because, well, as you probably know, it's like trying to, once again, I'll repeat, it's like trying to swim in a pool full of sharks. And this attempt to identify the market's overall direction during the reaction period immediately after the news comes out. So it's basically the same as gambling, right? It's just betting on the direction. And the third reason is ignoring risks. That is, when you try to use this news, the worst thing is trying to win back your previous losses, trying to make some money off of something, and so on and so forth. In other words, it all just looks like a really bad idea. Yeah, so basically, you should absolutely never do this. Never do it at all under any circumstances. So, entering before the news, increasing your risk, it's gambling. All this constant movement in these various directions is not trading. In other words, it has nothing at all to do with real trading. And there's a good word for it, which I really like in this context. It's betting. In other words, betting means placing wagers. So you're just trying to guess where the market will move and trying to make money off of that. That's why nothing good comes out of this. And as a rule, traders lose their money this way. This is also one of the reasons for losing money. So remember, professional traders do not try to predict the news. News, in principle, is impossible to predict. Not only is it impossible to predict the news, it's also impossible to predict how the market will react to that news. In other words, it's a tautology, but these are completely unpredictable variables. This is very important. So remember, a very simple approach, in this case a reasonable approach, is actually quite banal. First, stay on the sidelines. That is, during the period when major news is being released, we do not trade on the market. So if you have any open positions before the news comes out, you need to pay attention. So if the market, for example, allows you to move your stop to break even, you should do it. Or if the market allows you to partially close your position, if you have a good profit, you should do that as well. If the market allows you to exit at break even, it's better to exit. This is important to do and trade after the events have occurred. That is, you should wait for at least an hour or two. Once the market has settled and calmed down, you should basically be able to see exactly how it is behaving. And only after that can you consider making your move and entering the market. So remember, your main task is to survive. As a matter of fact, I keep repeating that traders who come to the market tend to set for themselves the wrong goal from the very beginning. Right away. So let's imagine that 90% of traders in the market fail. That's actually a fact. And a newcomer who comes here, just imagine 9 out of 10 people fail. And he immediately sets himself a goal to make money. But his main goal should be to survive. In other words, his main goal is to stay in the game. That's the main goal of trading in the beginning. Well, not in principle, but yes. Because overall, the main goal of trading is to make a profit. But that's not the first goal, it comes second sequentially. Accordingly, is the same with trading on news. It's better not to trade because your goal in the end is to survive in the market. So, my friends, that is basically how working with the news looks in actual practice. I think I have explained to you all quite clearly by now that it is much better not to try to make money there. Yes, I know that sometimes it may really seem to you that you could have made some good money or that you could have traded a very good move. But believe me, there will be plenty of such moves. There are a lot of trading opportunities in the market, and there are opportunities where you can earn with super minimal risk. Your task is to find such situations. Thank you for watching this video until the end. Check out our other educational videos as well. We'll see you in the next videos. Bye.